In the cement sector, UltraTech will acquire 23% stake in India Cements. This move will help UltraTech strengthen its presence in South India. To discuss this and more, we have Mangesh, Bhadang, the Senior Vice President Research at Centrum Broking, and Sandeep, Parekh, founder of Finsec Law Advisors, joining us now. Gentlemen, good afternoon. Thank you so much for joining us. Mangesh, let me come across to you first up. What is your view on this particular deal? There's been a lot of consolidation happening already in the sector. What would this mean?
Hi, thank you for having me. So, see, this is for UltraTech. They have taken this 23% stake, which is a non-controlling stake in the company, just to secure the asset, in my opinion, because the existing promoters are not willing to sell further stake in the company. But a very large investors were already present, and they have sold their asset. So, they puts company in a relatively better position. But I would not say that this would lead to consolidation because, as I said, they still don't have the controlling stake in the company. The cost of acquisition for this transaction is relatively fair, or in fact slightly on the higher side, in my opinion, at almost $88 per ton. And if they have to go for open offer in future, and if the price is higher than this, then I would actually term it as a slightly expensive deal for the company.
That's interesting, Mangesh, you say that. But, then the question is that because it's recognized as a financial asset on their books and there is no commentary around whether there would be an open offer at some time in the near future, etc., how does UltraTech then derive value out of this deal? And what happens, how do you look at this for India Cement shareholders?
See, for India Cement shareholder, I think it's a win-win situation. The reason being, as I said, currently only a large investor has exited, and the existing promoters do not have a very large stake in the company. So they have 28%. So even if they would have only acquired the 28% from the promoter, that would have triggered the open offer. But in this case, because the stake is below 25%, it doesn't trigger the open offer right now. So at the time of open offer, probably the existing shareholders should get some more value out of it. But currently, I don't see that, that is, apart from this, if this stock can trade at, say, above $90 or higher valuation. And given the current scenario, I don't expect them to give a premium valuation or probably go for an open offer at this price.
Okay. How does UltraTech derive value out of this?
So in case of UltraTech, in my opinion, it would help them do is it will thwart the entry of Ambuja in a very aggressive way in these markets. So they currently are, even though it's a fragmented market south, they still are number one player in this. And with Kesoram acquisition, they have very high market share that they have derived in the Karnataka market. With this, if this acquisition goes through and they get a controlling stake, they will have a further or higher share in Andhra market as well. So cumulatively, UltraTech, Kesoram and India Cement, they would be around 30 or more than 30% market share or capacity share. So that is something, which will help, which will give them a very good hand in future in terms of dealing with the, vagaries of the dynamics of the industry.
Okay, we take that point, Mangesh. We'll come back to you in just a bit. Sandeep Parekh is also joining us. Sandeep, I wanted your take first on the deal. And, we are seeing increase in share of ownership control. There's significant shareholding by larger players as well. Any impact from the CCI angle? What do you make of this entire deal?
Hi. So I think, so probably a significant first step in the acquisition of the company. And when I say that, obviously, when a financial investor invests, it can be a financial investment. If a cement company is acquiring 20 or 23% of another cement company, I think the intent seems to be reasonably clear that at some point they will want to acquire the entire, they want to digest the entire company. And then obviously consolidate it through an M&A process, at which stage the CCI question that you raised would arise. At this stage, of course, it doesn't arise, number one. And number two, at this stage, even the takeover open offer does not arise because the stake is below 25% and it's not a controlling stake. But it's also important to know that, besides the fact that 28% is owned by the promoter, If you see the public domain, you will see that 46% of that stake is actually pledged. Those shares are pledged with lenders. So there is some kind of sensitivity there in terms of what the promoter has. Even though the promoter controls 28% of the voting rights, some of it is more fragile than the numbers that point out, really, because nearly half of that is pledged with lenders. So I think it seems like almost certainly seems like step one towards a larger goal of acquiring the company. But that process is much more complex and much more expensive. So I think we'll wait for that to kind of play out in terms of both the CCI approval and the open offer, which will need to come at that point.
Right, gentlemen, just hold on to that thought, because as we were talking about that big deal, the market has hit conversation. Mangesh, I wanted your thoughts on what happens to all the other South-based players now, larger entities who are looking to increase their presence in South, or the existing large entities in the South. Because while we're seeing a lot of traction in a lot of cement stocks as a rub-off today, one of them which is actually underperforming is Ramco Cements, which is down about 1.5%. Two deals back-to-back, big deals in the South by larger players. Is there a worry?
Yeah, so see, as I said, South has always been a fragmented market, and what we have seen is that all these companies used to operate in their own regions, and generally used to have relatively better pricing discipline there. For the past 2 or 3 years, that has gone for a toss, and all the regional small companies which used to be slightly bigger companies in that region, those have started now becoming smaller and smaller. So I think eventually you'll find that 2 or 3 years down the line, UltraTech and Ambuja would actually have a very commanding share in those regions and will dictate the terms. And on top of it, Ramco is in a situation wherein not only the profitability is lower, but their leverage is at an all-time high. So that is something should weigh on the stock for some time, in my opinion.
Okay, all right. We take that point, Mangesh. The cement space continues to be in focus. Sandeep, Mangesh, thank you so much for joining us today and speaking to us about this particular deal. And this has been a big one, so thanks for your inputs today. We'll do one thing. We'll slip on into a short break with the news that Nifty is just very close to the 24,000 mark. But we'll keep continuing to discuss the market fundamentals and stock-specific news. We'll slip into a short break. When we come back, we'll connect with Rajan Sethuraman, the Chief Executive Officer at Latent View Analytics, as company's extended timeline for completion of Decision Point Analytics acquisition.